Welcome back. Kern Watts here with Orlando. We're going to be discussing insurance for these next 15 minutes.
Yeah,
Orlando?
uh, yeah, it's Orlando here. I really wanted to talk about this topic because it's something that I've been having these discussions with my own family, right? What are you doing? Are you setting yourself up? Are you setting your family up for success when you pass and you've gone to the other side to where they can just essentially have enough money to survive without your income, right? Quick story for me, this really hit home when my mother passed away. And when she passed away, I lived in Canada. I had to fly back to the States. And my wife and I had to pay just about everything for her funeral. And funerals are not cheap, especially when you're paying in Canadian dollars and it flips over to that American dollar, and you're flying back and forth from Canada to the U.S. Right, and so I think, and when you're looking at the bigger picture, and we talk about systemic racism, and we're talking about generational wealth being passed down, I do feel like one of the easiest ways to pass on some wealth to your kids, to the next generation, is life insurance. And that's why I really wanted to talk about it, because sometimes when you're not in this world, you don't know, right? And so for me, I wanted to make sure that when I'm gone, that I left enough money for my wife that she doesn't need to worry about the next 3 to 4 years if she wanted to take time off to raise our kid. And I made sure that I left enough for him to go to school if he doesn't get a scholarship, and enough to pay all the bills, outstanding bills that I have. So pay off the house and things like that. And so I think that we as a people need to really look at that and really see what legacy we want to leave behind. We always talk about legacy. What legacy do you want to leave behind? And something I don't want to leave is I don't want to leave this earth and leave my wife with a lot of debt and my son shaking his head talking about what's going on. I want to make sure that it's that peace of mind for me. I want to make sure that one of the things that I regretted the most, or that kind of hit me the hardest, was when my mother passed away. I because I was in grind mode to pay for everything and then to pay off those credit cards and pay off everything that we did. I never had time to grieve. And I feel like when somebody has life insurance and you pass away, and that advisor comes to your house within 5 days and gives your loved ones a check, and that check can pay for not only the funeral, all the funeral expenses, but can also pay for family members to fly them out if you wanted to, and whatever else that you built in that. Like, you have time to grieve at that point. You have time to breathe, and you can soak in the loss that you've had and grieve properly, right? So that's the reason why I really wanted to kind of dive deeper into the importance of life insurance. And Kern, you're the expert, so honestly, talk about the different types of insurance, right? Like you have term insurance. For people out there who don't know, it can be 5, 10, 15 years. At the end of that term, that's it. It's over. Or you can get universal life or whole life, which is like that investment component. You want to talk a little bit about that, Kern?
Yeah. Well, first and foremost, thank you, Orlando, for telling that story to everyone. But yeah, I agree with you. I think insurance is one of the selfless things you can actually do for all of your loved ones. It gives them the opportunity to grieve, it gives them the opportunity to breathe, right? You said you were in grind mode and everything is like stiff, you know what I mean? And you're not able to process what's happening, which is a natural thing for humans to go through at that point in time. So, in regards to the types of insurance, we have term insurance. As Orlando said, you can get as short as 5 years, 10 years, as long as 30 years. They actually have a T100, which is basically to age 100 as well as an option. And so, term, you can get a term for any specific term, even if you just want to cover a mortgage. But the problem, not the problem with that, I guess the con of that is that when you pay for term, you pay exactly for that term. And that is, term is what you get. You don't have any other benefits basically of that. The next step up would be a permanent insurance. We have whole life insurance in the industry where they basically give you an amount, let's just say $1 million. And then there's a growth component of it, obviously, to keep up with inflation and continue to grow. And so that $1 million would continue to grow every single year. The insurance company would manage that investment portion, and they give you kind of a range of what that can go to. But that actually gives you access to other things, and you can have your insurance actually work for you, meaning you have that whole life has access to a cash surrender value. And so that cash surrender value can be leveraged. So if that at point in time happened when you needed cash, you could essentially take the cash and take that to the bank and say, this is the cash value of my policy. You can lend against that. And they can potentially give you a loan against that. And then another alternative is universal life. And so you can have that as a set face amount, let's just say $1 million. You can have it grow similar to the whole life insurance as well, or you can have it even taper down. So meaning you could start with a higher amount and then you can ladder it down a little bit, and then you can have a permanent insurance policy there. And then, so those are all different life insurance tools. And then there's also critical illness. So critical illness would cover you for exactly that, a critical illness. It differs based on the company that you're dealing with, but that can cover you in a wide array of things, from Lyme disease to cancer to heart attacks to I can't even think off the top of my head, but there's a wide array of critical illnesses that they'll actually be, you can actually be covered for. And the importance of that is that a lot of people receive a type of critical illness, and a lot more are surviving. And so at that point in time, when the individual gets a critical illness, then they remortgage their house and they take out all their equity and they accumulate a ton of debt, basically trying to survive, right? Putting their families up in hospitals because they can't leave their side, those types of things. And so the critical illness basically pays out on those things. And then you can actually grieve through those things to get through those things. And so when you come out on the other side, you're not buried in the debt that you've accumulated for that. And so there's a number of insurances out there. I highly recommend that you get yourself covered. The rate of return would be pennies on the dollar for the amounts that you actually receive. I myself have permanent policy. I have permanent critical illness as well. Your health is first and foremost. I say that on the majority of my phone calls with the advisors that I deal with as well. And so your health is first and foremost. You can't trade that for anything. And you never know until it happens to you. And while you are younger, one of the best words of advice would be to get yourself a critical illness policy and a life insurance policy. Nobody makes it out of this world alive. And so there's 100% chance that you're going to die. And so getting a policy to pay out on that only means it's 100% going to pay out. And you could even portion that. I think of that as an investment in yourself, right? An investment in yourself and your loved ones, and you don't leave them in a compromised position, whether you do get a critical illness or you were to pass unexpectedly, right? We don't know when we're going to go, but every day somebody dies. Think about that. You do not know when you're going to go, but every day someone dies. And everyone's seen a number of GoFundMe's. I see it a lot in the newspapers as well. A husband leaves his wife and his children behind, and they're raising money for the funeral, right? So I highly recommend looking into getting yourself covered. And there's so much flexibility in just getting a type of insurance.
Absolutely, Karen. And you bring up a good point too, right? There are a lot of GoFundMe's out there when unfortunate things happen, right? But The thing about it is if you don't plan anything, then you plan to fail, right? So you have to make sure that you plan things in your life. And to go a little bit further, I believe that the, if you have a family of three, and let's just say every week you take your son or your daughter out to McDonald's just because they were good at school and that's your routine. And that's costing you anywhere between, if you're in the US, probably $20. If you're in Canada, it's costing you $32 for 3 meals. So if you times that times 4 weeks, you can actually get insurance for a month that's cheaper than going to McDonald's for 4 times a month. So you, and the younger you are, the cheaper it is. You can get about $700,000 worth of term insurance um, for a 45-year-old for like 20 years, and pay about $100 a month or a little bit less. You're gonna pay a little bit more if you're a male, a little bit less for a female, right? Because females tend to outlive males, right? If you have a son, to your point, with my son, I got him permanent insurance, and I'm paying it every month. And in 15 to 20 years, it'll be paid up. So we'll have that permanent insurance. I can stop payment at any time and it'll pay for itself. With that insurance, he can leave it like that. Or if he needs money for anything, he can use that as collateral and kind of give himself a loan. And so there's different things that he can do now that I'm setting him up outside of my own insurance, right? And if he gets older and he feels like he needs more insurance, well, you have this lump sum of insurance that's permanent that you don't have to pay for. Now you can kind of add another insurance too, right? Like you can layer insurances how you want. You can have, um, I'll give you an example. Me, if I'm saying, okay, I got $100,000 worth of debt because I own my house, right? And I owe $100,000. So I'm going to get $1 million worth of term insurance because I feel like in 10 years, I'll have no debt. So I'll get term insurance for 20 years for $1 million. If I pass away within that time, my wife will get the money. She'll put $100,000 towards the house and keep the other $900,000. But now let's just say I outlived that 100. I outlived the 20 years and now my term falls off. Well, I can layer it and put $1 million in term, and I shouldn't have any debt by the time I hit those 20 years, so it doesn't matter. But I still want a little bit of money for the burial. So, so that way it's not coming out of our savings or anything like that. So I might turn around and just get $100,000 of permanent insurance, which is going to be cheaper because I'm not getting a big lump sum. And that can be my layered approach, my ladder approach to my insurance, right? So then I have this and it'll fall off in 20 years. And then my permanent just stays on. And that permanent can just be to make sure that at the time of my death, everything is paid for, right? So there's different ways that you can do it. And believe it or not, it's very cheap. Somebody once told me, in order to get insurance, you have to really love your family because it's a benefit that you don't ever get to see, but your loved ones around you see it. So, and it brings me back to that legacy. I want to make sure that when I leave this earth, I'm leaving people with smiles and great thoughts about me, not saying this person left me with all this debt to pay for and how am I supposed to survive with a kid or 2 kids or 3 kids, right? And then, like I said, having a GoFundMe or something like that to where now people are whispering and saying whatever. Now, I'm not saying there's anything wrong with a GoFundMe. I think there's certain scenarios where I think it makes sense, but I think if we plan properly, those outside sources we don't really need because we would have planned properly for those situations, right? We save to get a car. We plan. We go to school. We study to take our SATs, and we plan to what school we're going to go to and things like that. Why not plan this? This is the one thing that you know for sure. To your point, that's going to happen. It's death. So
Yeah.
why not just plan for it properly? So therefore, if people can actually have peace of mind when it happens.
Well, I like the note you said. When you started, if you fail to plan, you plan to fail. My mother always says that, and it is so true. I think of it as when we think of wealthier people passing, right? And oh, they have a big funeral, and there's people that go to their funeral, and they're not happy, but they're smiling, right? Because they know it's already taken care of. And I think of that. That's what I think of when I think of life insurance. I think of they're not upset, they're not angry. It is a natural occurrence, and it happened, but the individual was prepared.
Absolutely.
And I wonder if you could actually see the difference in funerals or in families if somebody did or didn't, right? And they're leaving people with that debt, right? Because that's another thing that they're actually carrying. um, and so it affects people differently. But in some people, you might not qualify for insurance, or you might get a rating,
Yeah.
but at least you know. And a lot of times people actually go to the doctor after having a rating that they didn't think they deserved, finding out that they needed to look after their health in itself. So I think there's nothing but good things that can come from it. And at some point in time, individuals pay for it. Um, and if they can justify it, if they can see it,
Yeah.
right? I know a lot of people think, oh, I'm gonna save and I'm gonna build up this money, but life insurance actually is a tax-free benefit
Absolutely.
as well. So that's what a huge benefit to the efficiency of the dollars. Um, so thank you very much for discussing this topic. I look forward to discussing it more in the future and seeing what else we can bring out. But I hope that was a little bit of knowledge where everybody felt that they can grow and that they've learned. And feel free to reach out, send us an email, and we can discuss further.
Yeah, and if you want to go a little bit deeper about life insurance, make sure you go see your local advisor, whether it's an independent person or at the bank, because life insurance is very important, not only for yourself, but also just to set up your family for generational wealth. And
Mhm.
like you said, it's tax free.
Yeah. Thank
Thank
you.
you.